Can an AI trade better than you? What if I told you we gave some of the world's most advanced AI models like GPT and Gemini $10,000 in real money and let them trade crypto? You'd probably expect them to make a fortune, right? Well, one of them lost over 60% of its capital in just a few weeks. That's right. A multi-billion-dollar AI model blew up an account faster than most retail traders. This isn't a hypothetical. It's what happened in a fascinating experiment called the Alpha Arena. And it raises a massive question. If these superintelligent AIs can fail so spectacularly, what hope do human traders have? And more importantly, what did the winning AIs do differently that we can all learn from? This isn't just about AI. It's the ultimate Turing test for finance, and the results will completely change how you think about trading and investing. Stick around, because we're diving deep into the AI trading showdown that revealed the single most important secret to winning in the markets. All right, let's set the stage for this epic battle of the bots. The competition was called Alpha Arena, and the rules were designed to be as high stakes and transparent as possible. We had 6 of the top large language models in the ring: DeepSeek, Qwen, the much-anticipated GPT-5, Gemini, Claude, and even Elon Musk's Grok. Each of these AI giants was given a starting capital of $10,000, real cash, not simulation money. And where did they trade? In the Wild West of finance, crypto perpetuals. We're talking Bitcoin, Ethereum, Solana, some of the most volatile assets on the planet. To make things even spicier, they were allowed to use high leverage, up to 20x. This means a small price move could either lead to massive profits or instant liquidation. The setup was brutal but fair. The most crucial part? Once launched, there was zero human intervention. All their trades, their reasoning, their digital sweat and tears, it was all logged and made public. The goal wasn't just to make the most money, it was to achieve the best risk-adjusted return, measured by something called the Sharpe ratio. This means the AIs had to be smart about not just winning, but also about not losing. This wasn't a game. It was a real-world test of whether pure intelligence could conquer the chaos of the market. Now, with the rules clear, let's get to the juicy part: the results. When the dust settled, the results were shocking. It wasn't a close race. It was a bloodbath on one side and a masterclass on the other. Let's look at the winners and losers, because this is where the story gets really interesting. On one side, we have the casualties, the so-called panic traders. And who was leading this pack? None other than the models from Google and OpenAI. Gemini and the much-hyped GPT-5 got absolutely wrecked, losing huge chunks of their starting capital. Gemini, for example, bled out over 60% of its $10,000. So what went wrong? When we looked at its trade log, it was behaving like the most stereotypical, emotional, amateur retail trader you can imagine. It was executing dozens of frequent short-term trades with high leverage. It was chasing small moves, getting chopped up by volatility, and essentially gambling. It was overtrading and losing faster than you can say wrecked. It had all this intelligence, but in the market, it acted impulsively and paid the price. Now let's flip the coin and look at the victors, the patient snipers. The 2 standout performers were DeepSeek and Qwen, 2 models from China. These AIs didn't just survive, they thrived, with initial returns rocketing past 100%. They effectively doubled their money while their Western counterparts were burning cash. Their strategy was the complete opposite of Gemini's. They adopted a high-conviction, low-frequency approach. They didn't trade every day. They didn't chase every little price flicker. Instead, they waited patiently for high-certainty setups, the perfect moment to strike. They would enter a trade, and then they would hold, demonstrating incredible discipline in their risk allocation and keeping their drawdowns minimal. They traded like seasoned professionals, not hyperactive gamblers. The contrast couldn't be clearer. One group traded fast and lost, the other traded slow and won. And this leads us to the single most important lesson from this entire experiment. So, What is the core lesson here? What's the big takeaway for you, me, and every other human trying to navigate these crazy markets? It's this: math beats intelligence. Let me say that again. In the chaotic world of trading, a superior mathematical and risk management strategy will always outperform raw general intelligence. This experiment was the ultimate proof. Qwen and DeepSeek weren't necessarily smarter in a general sense than GPT-5 or Gemini. They couldn't write you a better poem or summarize a complex historical event as well, but they had a superior trading algorithm built on discipline and risk control. They understood that the number one rule of trading isn't "how much can I make," but "how much can I afford to lose?" The losing AIs, like Gemini, fell into the classic high-frequency trap. Their failure teaches us the most valuable lesson of all. Overtrading and overleveraging are the fastest ways to destroy your capital. It doesn't matter if you have an IQ of 200 or if you're a billion-dollar AI model. The market will punish impulsive behavior and a lack of discipline every single time. It exposes the human, or in this case the artificial, tendency to think that being more active means being more productive. In trading, the opposite is often true. And this brings us to the most important takeaway for you as an investor. If a state-of-the-art AI, with its immense processing power and access to infinite data, cannot beat the market by day trading constantly, what makes you think you can? The successful AIs in this experiment mirrored the strategies of the world's greatest investors, like Warren Buffett. They focused on long-term, low-frequency, high-conviction moves. Even Grok, which was a more modest performer, succeeded with minimal, well-thought-out trades. The message is crystal clear. Stop trying to be a day trader. Stop trying to catch every little market wiggle. Your brain, as powerful as it is not designed for that. And as we've just seen, neither are the most powerful AIs. The path to success lies in patience, discipline, and focusing on quality over quantity. So as we wrap this up, what have we learned from this incredible AI trading showdown? We've learned that the market is the ultimate Turing test. It doesn't care how smart you are, how fast you can process information, or how well you can articulate a market thesis. The market only rewards one thing: disciplined execution. The AIs proved, once and for all, that the timeless principles of finance, patience, risk management, and emotional control, are far more valuable than raw processing power or a fancy brand name. The winning AIs weren't the ones that acted the smartest. They were the ones that acted the most disciplined. They avoided the temptation of constant action and instead waited for the perfect pitch, just like a professional trader or investor should. The losing AIs, on the other hand, perfectly mimicked the worst impulses of a human trader: panic, overconfidence, and a desperate need to always be in the market. This brings me to a final question for you. The AIs that lost were basically acting out a form of digital panic. If an AI, which has no real emotions, can fall into these panic-driven traps, it really makes you think about our own behavior. So I want you to tell me in the comments below, what is the one impulsive trade you regret making the most? Let's share our experiences and learn from them together. The Alpha Arena showed us the blueprint for success is not about being the smartest person in the room. It's about being the most disciplined. Thank you so much for watching. If you found this analysis of automated wealth strategies as fascinating as I did, make sure to hit that like button and subscribe to the channel for more deep dives. We're just scratching the surface of what this technology can teach us about money and ourselves. See you in the next video.